This is Andre Banks coming to you from Banks Credit Chat. Happy New Year to 2021. And I'm going to start the new year by just talking about 3 of the worst decisions you could do for your credit, especially for 2021. But it really applies to any year, but 2021 is the year we're in. So take these and really pay attention to them. Number 1, cutting off your credit cards, closing them out, and just cutting them up. Sounds like a good idea, but it's actually one of the worst decisions you could do, especially because everything is dependent on credit these days, and credit is how we exist. I've done videos in the past saying credit is the new money. So cutting up your accounts and closing them out, although sounds logical if you find yourself in a situation where you're really overwhelmed by the debt, but really it's one of the worst decisions you could do. And that's for a couple of reasons. The first one being is that you're messing up actually any good credit payment history by closing out that account. Let's say you had started your first account in 2000, and that's 21 years of payment history that you're getting away by just cutting up that account and allowing you to start over. The next also registers up your credit utilization rate, because now all the debts that you've closed out are now showing and reflected that's available. I mean, not available, but yeah, lack of a better term, available. Actually appears that you have all those debts now. Closing on accounts out doesn't do anything, but really impacts you in a negative way going forward. And since credit is how we exist and nothing gets around credit, that is one of the worst decisions you could do. A, for your credit utilization rate. B, is that you're messing up the long-standing payment history that you've accumulated over the number of years having those accounts. So a better suggestion would be to find someone you can trust, or hide those accounts, don't not close them out, or just don't have access to them and start paying them down. And as you pay them down, you can still have them open, but the objective is not to close them out and cutting them up, because everything devolves on credit. And doing that will really put you in the worst situation you can ever imagine. Number 2, and this is a little bit controversial because people would suggest doing this, and I've talked about this, me and my brother talked about this in the videos in the past. Do not utilize a credit repair company. That's one of the worst decisions you could do for 2021, especially for your credit. Now, people would say, well, in certain situations, wouldn't a credit repair company be more valuable? Well, let's use Lexington Law and one of these other popular credit repair companies. They really don't do anything to help you, in a sense, by essentially, since they're flooding your accounts, flooding the credit bureau and agencies with different letters stating and disputing the negative accounts. If they're legitimate, as I've talked about before, they will come back on your credit report. So utilizing a credit repair company and paying a fee for something you could do on your own, or really, and if it's a legitimate debt, you really will have to pay it anyway. It doesn't make any sense to do it. Even if it gives you a short-term boost because they're disputing these accounts, they will tend to, in my experience, they tend to come back on your credit report in the future. So any legitimate collection account debt, you want to tackle it yourself, set up payment arrangements, and stay away from credit repair companies, just as a general rule of thumb. I know they have some great advertising and they're saying they could do all these different things for you, but credit repair companies, again, they typically function from getting you to pay a monthly fee and disputing items on your credit report that, if found legitimate, will appear on your credit report again. Some of them try to provide some credit advice, and it seems like credit knowledge or some things that can benefit you, but typically when you're paying a credit repair company, even in the financial or credit advice that they're providing, stuff that they can be found on the internet for free. So again, number 2, worst decision you can do for your credit is actually use a credit repair company. Third one is another one that's controversial. Do not utilize a 0% credit card and compiling all that debt to put it on that one. Kind of jumble that up, and let me flush that out and explain what I mean here. First thing you're going to see a credit card say, well, if you can do a balance transfer, we can do it for 0%. Sounds like a good plan, but the problem is the devil's in the details. Typically, those 0% is only going to last for a short period of time. They're not for the whole length of the the credit card account. And once a 0% period is over, it usually jumps up to anywhere to between 10 to 12 to 14, or even high as 22% or even more. Now, if you have a large amount of credit debt and you're going to come into a lot of money, then and you're going to pay off that debt, then yeah, you would want to utilize a 0% interest rate. It's a better option because you could be able to pay that off because you have the money in hand to do that. But I would stress that shuffling debt, and that's essentially what you're doing by using a 0% interest rate credit account to pay off those other debt obligations, it usually doesn't work that way. And typically speaking, people who have done it in the past only found themselves now compiling all that debt into one account, and you close out the access to the other accounts, and you hope, and then that interest rate just jumps up. So again, as a rule of thumb, unless you're extremely disciplined, do not transfer the debts to a 0% interest rate credit card. Sounds good in the short term, but in the long run, it usually runs out to be more disastrous, and people really don't have the discipline in that. Not saying that everyone may fall in that category, but with credit being as such, and the majority of people struggling with these days, we got over 50 to 60% of people having a very low credit score. And just in terms of general population, what may sound like a good idea of 0% that jumps out to you, usually, again, people are not disciplined enough to pay it off in the time frame before it jumps up to a higher interest rate. So those are the 3 different things not to do that's really the worst thing you can do for your credit for 2021. Number 1 is cutting up your credit cards and just closing accounts out. Number 2 is using a credit repair company to help with your credit, with collection accounts at that point. And number 3 is transferring the debt into a 0% interest rate. Now, these may seem controversial, but take my word for it. For my 5 years of working as a credit and housing counselor for the largest debt management company, and one of the largest debt management companies in the United States, from the experiences, especially the last 2, in terms of using a credit repair company as well as using a 0% interest rate and shuffling the debt and hoping to pay it off before that 0% interest rate jumps up to a higher term rate, they typically it doesn't work out well. So if this video has been any value to you, please subscribe, leave some comments, and until my next video, I'm out.